everybody, how are you? My name is Ricardo. I am the founder of Phoenix Trading Strategies. The purpose of this video is to do a video for Trading Pub, for an ebook that they invited me to participate in called The Best Time to Trade Currencies. And what I want to share with you today is called Decoding the Market Maker's Order Flow Footprint with Phoenix Trading Strategies Indicator Suite. Now, I know that some of you are and have been searching for the right reason to trade. And it is a maze of information. I'm not going to say no. And at the end, I hope that the results will speak for themselves and that you will consider Phoenix Trading Strategies as your guide in this maze of digital manipulation and warfare by the banks. So before we continue, I want to share with you and I want to explain why you should continue to see this video for as long as it takes. I promise that it will be short, but at the same time, I want to pique your interest because I'm going to show you today what it's like to make 400 pips in one night. So if I have your attention, then that's good. Then we can continue. Here's a disclaimer. Future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the future stocks and forex markets. Don't trade with money you can't afford to lose. This presentation is neither a solicitation nor an offer to buy or sell future stocks or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. Past performance of indicators or methodology are not necessarily indicative of future results. Now that we've gotten that out of the way, I hope I've excited you. You know, to make close to 400 pips in one night is practically impossible for the retail trader because they lack the information to decipher what the market makers are doing. So I want to go over what is the market maker's protocol in the foreign exchange markets. I think it's very important that you understand this because it is the foundation of information that will make the difference. You know, there's a saying, and I'll begin with a statement. You know, this was a movie back in the 80s that came out, Wall Street, and there was a character in that movie called Gordon Gekko, and he made a statement which was the most valuable commodity that he knew was information. And he was right. The most valuable commodity in trading today is information and time. He missed one thing, time, and I'm going to show you why that matters. So let's go over why the market makers protocol. What is their protocol? First, their first protocol is to win and never let you get an edge over them. Don't ever forget it. Their second protocol is to manage risk by doing what I call currency portfolio rebalancing. Why? Because they are in the market 24/7. And so they have exposure and risk that you and I do not. Retail traders go into a trade for minutes at a time, a few hours, and some of us even for a few days. I'm going to show you a trade that I took the night before, not this morning, but the night before. And normally I would hold that trade for about a day and a half, and that's it. Why? Because I just don't feel comfortable holding a trade any further. But the banks and market makers hold their positions much, much longer, for days, for weeks, for months. So their exposure is higher, and so they have to constantly rebalance their positions. And so sometimes they will take certain currencies out of balance within the portfolio of 8 and bring others back into balance. Well, each time they bring one back into balance, they take another one out of balance. And so it's very mysterious how they do that, and very mischievous. But if you understand what they're doing, it'll make a difference. The third protocol is to counter-program most common indicators that you've been using, such as moving averages, stochastics, RSI, candlesticks, Elliott wave, Fibonacci, etc. Why? So that they are lagging to you, so that they do not perform as well as they should. Why? Simple reason. You were never meant to win. But now we're going to change that, because now everything that you do will change from this point on. And you will look at the market from a different perspective. You will look at it from an institutional perspective. And I believe that that is what makes the difference in some traders, that they change their mindset. What is their fourth protocol? Fourth protocol is to not display their real volume to the real retail traders. Why? Because there's never been the technology to display the imbalance of order flow in each candle, defining the real price level that the buyers are interested in buying, or the real price level that the sellers are interested in selling at in the candle. And that is something that has evaded traders for a very long time, not just the retail traders, but even institutional traders. So you're going to discover that now, with the cutting edge technology that we've developed here at Phoenix Trading Strategies, you're actually going to get an edge that you haven't had in a very, very long time. And that has made you frustrated as a trader, because sometimes you win, sometimes you lose, but you can never get ahead. Well, you're going to learn how to get ahead now. What is our protocol? Forget the banks. Our protocol is to identify the real support and resistance levels through the power dot algorithm that we've designed, and now find the imbalance of buyers and sellers in each candle through their order flow footprint. Why is that important? Because that defines the real intent of the trade, and that is what will give you an edge. So at the end of the day, when you compare us to other educators out there and trading methods, you'll discover that we are completely outside the box. And that many times, many retail traders can't really understand what we do and why we're doing it, because they're so new to the market. And so they have to learn about candlesticks, moving averages, RSI, stochastic, MACD, but unfortunately come to discover that those are indicators which cannot perform in these types of market conditions. Why? Because they're looking at the wrong information. It is unfortunate, but true. With us, you will be looking at the correct information. It will be displayed visually and numerically. And remember, every formula has to add up. If not, it's not a real formula. Math is simple. 1 plus 1 equals 2. 1 minus 1 equals 0. So if it doesn't add up, then it can't make sense and it can't work. And so that's what we're going to show you today. Why do most traders lose? A very harsh and sad reality. First, they're not chart pattern. They do not understand chart pattern recognition that well. And that is an issue. You know, understanding chart pattern recognition can make the difference in most traders. Well, only 3% actually really get it. They actually visualize it. And that's why they have success. Not everyone is like that. Second, you're using lagging indicators to make decisions, which usually lead to losses. You know it and I know it. If you really think about it, when you go back and see, you know, would a moving average have made the difference for you in an entry or an exit? You know, did it tell you to go one direction and not work? You know, did you use Fibonacci correctly? You know, where did you plot, you know, the first level to the end, to where it ended? You know, were the numbers correct? If you were using pivot points, did they really matter? Did they really help you? The answer at the end is no, they didn't. They led you to a slaughter. And like I said, it is a harsh reality, but we're going to change that. Third, traders see things from the outside, and so they will never fully comprehend what happens behind closed doors in this industry. And the reason why is because you haven't really been exposed to all the information that you need in order to make the right decision to trade. You've been given partial information, and that is a protocol that the industry has followed. They'll give you so much information where they'll allow you to think that you can win, but then at the end you lose. And the frustration begins. Trading is not supposed to be depressive. And unfortunately, for many people it is, for the same reason. And they think that they can find all the answers in YouTube, and that isn't that isn't so. I can attest to that, and I can show you that. And the reason why is because you can't get the right information for free. It's just not going to happen. You have to come to terms in reality with that. Free is never good because it has limitations. Some of you use MetaTrader 4. Now, I like MetaTrader 4. However, MetaTrader 4 has its limitations as a platform. 1, it's free. 2, it's the time frames. 3, they don't really provide tick data, they provide minute data. So, the indicators that you can find to use MetaTrader 4 are endless, from expert advisors to every type of indicator. I could possibly find you 1,000 indicators that you can load on MT4 for free. Will they make a difference for you? No, they won't, because the platform in itself is useless. If you want to trade, if you want to learn how to do it the right way, you're going to have to use a professional platform. I myself like to use NinjaTrader. I find it a very good platform. I find the information that I need. It provides the tick data that I need in order to make my algorithms work. And I'm going to share how my algorithms work with you today. You're going to see them live, and you're going to make a decision whether I'm right and everyone else is wrong, or whether I'm wrong and everyone else is right. At the end, I think that you'll make the right decision, just like many people that have followed me and have taken my course and have and are using my technology. Fourth, why traders lose. You don't have the correct information to assess the real risk when entering a trade. Remember, every time you enter a trade, you take on risk. How much risk is what will determine your success, because you can't win if you don't risk. But if you minimize the risk of what you're exposing as a stop loss, where you're entering the trade, and even where you're exiting the trade, where your take profit target is something that many people can find decent entries, but they don't know where the market's going to change, when it's going to reverse. That is information that the retail trader really can't wrap his head around, and that is because the banks don't want you to. Until now, I'm going to show you that there is an imbalance in the candles, a discrepancy between buyers and sellers, and that is information that has never, ever really been available to the retail trader, and that we have the right formula while everyone else is using the wrong formula. As arrogant as it sounds, it's true, and you'll see it for yourself. Like I said, to make almost 400 pips in one night is something that most retail traders only dream about to make in 1 month. I'll show you how to do it in 1 to 2 days. So let's continue. I hope I have your attention. What is portfolio rebalancing by the banks? Well, let's talk about that, because I think that this is the foundation of information that you need in order to trade. Bottom line, like I said, the most valuable commodity out there is information and time. Do banks have algorithms that manage their risk with their FX and futures portfolios? The answer is yes, they do. They've created programs that manage their risk and take the human effect out of it, the human emotion. You and I trade based on emotion. Why? Because we see a trade moving and we get excited. We want to jump in. We don't assess risk. We take risk because we're emotionally driven. I'm going to show you not to do that anymore. Why do they do that? The banks, to manage risk and maintain the frequency of risk in balance. Everything is about balance for them. If it's out of balance, it cannot work. And so you're going to discover why there's a frequency of price that they keep certain currency pairs under a specific range. Is this an insider secret? The answer is yes, it is. How can you learn to understand this? Very simple. Join Phoenix Trading Strategies, and you will learn why. What are the benefits for applying this to trading? It's everything that you've ever wanted. Everything that you've ever needed to understand why the machine works is based on currency portfolio rebalancing. Without understanding that concept, you cannot succeed. Now you can tell when they're going to drive volume and momentum into the market before anyone else knows. Why? Because this is the secret to the Phoenix trading method. We have designed algorithms that have reverse engineered their whole protocol, their whole thought process, their whole decision process. Why? Because they base their whole decision process based off of volume and order flow. Not off of moving averages, not off of MACD, stochastic, RSI. That's basic information which cannot be used anymore in this type of market conditions. You have to evolve. If you do not evolve, then don't get involved. It's that simple. You will lose. And then you will be upset because you made a wrong decision. Well, the wrong decision is using old, outdated indicators that no longer work. Old, outdated methods that cannot help you get ahead. So you're going to have to make an investment of time and learn. There is a new order and a new way of trading, and that you will learn with us. So what are the steps to designing the trading plan for this method? Well, we must first understand the basics of support and resistance. What time frames do they establish their levels? The answer is that I'm going to show you that they use the monthly, weekly, and daily to determine their support and resistance levels. It's a simple method to master. Most institutional traders do this. I'm going to show you how to use the software. I'm going to show you what are the power dots, the time frames that we must use. What do they announce? Well, they announce volume and momentum buildup before anyone can see it. But more importantly is that they announce why the banks are needing to rebalance their risk around certain price levels before they drive the market in a specific direction. Again, it's about balance and risk. I'm going to show you what is a trend stop and why it is important under different market conditions. I'm going to show you how the trend dots are supposed to be used. I'm going to show you why the pivot dots that we use help establish trade targets that you can actually count on. I'm going to show you why the volume indicator is important to confirm volume divergence from a numerical perspective as well as a visual one. You see, our volume indicator is a proprietary algorithm that no one out there has. And it's completely different than the mathematical formulas that most of them are designed at, because most volume indicators use moving averages. Well, I'm going to show you that moving averages have been counter-programmed. And so if they've been counter-programmed based on the order flow and volume manipulation that the banks are doing through their high-frequency trading, then basically it can't work for you, can it? So I'm going to show you something that will work for you. How to use a sentiment indicator. How to use the Phoenix Congestion Zones indicator. Why the Phoenix Price Identifier has come to complete the final piece of the puzzle that was evading you. Now we can see the imbalance in the candles. The discrepancy, we can actually see how they communicate with one another, which is something that you've never really been able to see. And now you're going to be able to wrap your head around it, and it's going to make a big difference for you. You're going to understand why sometimes you get in a trade and then suddenly it goes against you. And you say, you know, if I only could see the reasoning behind their decision process. You know, why did I make that mistake? Well, you're going to see it so that you don't make that mistake. And hopefully that will make a difference for you. We're going to show you how to use the price identifier for trade setups. You see, the price identifier basically shows you what the real footprint is. And here's the problem, that most developers out there that talk about order flow trading and footprint have the wrong formula in their indicator. And I'm not saying that just because. Oh no, I know it. And I'm going to show you why. We are the only ones that have finished the race. So if you're really interested in learning how to trade, then the only choice at the end of the day will be Phoenix Trading Strategies. And like I said, it may sound arrogant, but it's not. In actuality, what I'm trying to do is help you. Because it took me 12 years to discover this. You see, no one has walked in your shoes as much as I have. 12 years ago, I started as a retail trader just like you. I knew nothing about the trade. I remember this because I bought Forex Made Easy. I paid $3,000 for 2 moving averages. I was so excited. I was going to conquer the world. And instead, the trade conquered me, and I lost. I lost a lot of money. And then I, decided to learn how to understand candlesticks. And then I said, okay, I'm going to get another shot at this, and this time I'm going to win because now I know what they're doing. And then, of course, again, I lost. And it was very disappointing. And then I would have these moments where I would win, lose, win, lose, win, lose. Does that sound familiar? Win, lose, lose, win, lose. And you never seem to really understand why you can't just consistently win. Well, in 2007, I came to the conclusion that I could not continue like this anymore, and that I needed to figure out a way to break into the industry and become a broker. And so I did. I first started off going to work for a small IIB as an assistant to younger brokers. And when I mean younger, I was, I'd like to say I was 37, 38, no, 36 years old, and they were 21, 23, 24. Now, I was very excited to go work with these guys because, number one, they gave me the opportunity, and number two, because I thought I was going to learn a lot from them. I didn't. I learned how the business worked for a broker, but I didn't learn how to trade from them because they themselves didn't really understand how to trade. They were selling a discount. They were selling a commission. So I stayed with them for about a year and a half, and you can see this in, excuse me, you can see this in my website. You can see my story. And I learned the business. And then once I got licensed in 2008, then I went to work for a very large futures commission merchant, which was also a Forex dealer member. And that's where everything opened up. You know, there's a price to pay to learn to trade. It's called time. I can shorten your time span based on my experience. That I can assure you. I'm going to show you that trades with minimal risk, what trades with minimal risk are versus trades with higher risk. I'm going to show you 3 examples, one using the power dot formation, another one using the trend stop, support and resistance levels that are manually identified. I'm going to give you 3 reasons to trade, and then I'm going to give you the one that you shouldn't. because there's always, sometimes the best trade is not to trade. It is the one thing that most retail traders just cannot seem to do is stop, is not pull the trigger, because we get caught up in the emotional aspect of trading. Instead of defining metallic, disciplined rules, it's called structure. As retail traders, we lack it. I know this because I went through exactly what you've been through. But I can take you out of that situation and put you into a better one. I'm going to show you how to determine entries and exits 2 to 3 candles before anyone sees it. That's a strong statement to make, Ricardo. But I'm going to show you why. And at the end, I'm going to show you why we finished the race before anyone else. A lot of people out there started the game, but we just finished it. We call this a slam dunk. We call this checkmate in chess. I'm going to show you, and you're going to understand why volume spread analysis, volume price analysis, volume divergence, and order flow fall under one method by Phoenix Trading Strategies, where everyone else has been trying to combine all 4 concepts, but they haven't been able to because of the lack of understanding. I feel very fortunate and blessed to be in the situation that I'm in because I was able to figure this out. But again, it has taken me 12 years. And I've taken courses out there just like you before I was a broker. And as a broker, I was able to work with a lot of CTAs, commodity trading advisors, that were managing, a lot of funds. I was also working with software developers, and I helped develop the first electronic communications network for the retail market. I worked with a team of engineers in my company that set the bar so high in technology that we were cutting edge. We were the ones that began it. We were the ones that finished it. And that's where I learned the protocols that the banks used to define their decision process based on their high frequency trading and manipulation of order flow. And that's what I'm going to share with you. So now let's look at some charts and examples, and you're going to see why I can show you how to make 300 to 400 pips in one night, in one sitting. If you have any questions, you can reach me. My email is there. It's called ricardo@phoenixtradingstrategies.com. And I'm going to explain to you a little later what the special for today is for the Phoenix Trading Method. This link that I'm putting here is to invite you, for those of you that are interested in learning more, to join me. I do a trading room, which is actually a training room, on Mondays and Fridays from 9 a.m. Eastern to 11 a.m. Eastern. It's free. It's where I show people how my technology works, how to decode what the market makers are doing, and how to take them to the next level. So I hope that you can join me. But now I think it's time for us to actually look at some charts so that you can see what the difference is between what we're doing and what everyone else is doing. See, I didn't want to just show you charts and talk in hindsight. I wanted to show you results. I think that at the end of the day, what matters is, can you trade? Can I help you to achieve your goals? Can I take you to the next step? There's a lot of traders that I've dealt with in the past that were on the verge, on the edge, but they couldn't get through, and now I've gotten them through. So I'm going to show you a trade that I took last night, which is very relevant. Why? Because number one, it was a rate announcement, and number two, because it was so easy to identify. It was like taking candy from a baby. This is the trade. This is my entry. The British pound, pound dollar. My entry was here, and this was at approximately 1:30 in the morning Pacific time, which is 3:30 in the morning Eastern time. This is where I entered. It was at this price, 153.93. Now, I entered twice, and so I'm going to show you where I entered because I think you're going to enjoy this as much as I have. So this was my first entry right here. And as you can see, and now I'm going to explain, very briefly what these indicators are. This is my volume indicator. And as you can see, it is completely different than anything out there. But it's so different that I can actually show you their order flow. Oh, yes. Oh, no. What you're going to see right now is something so unique, it's going to blow your mind. See this candle right here? Look at panel number 2 in the data box. What does it say? It says buying volume 170 million, selling volume 120 million. What is the net or cumulative? 51 million. Now, what did I just do? I'm basically telling you how much volume they're putting into the market in one candle. And I can tell you the same thing in each one. See this next candle right here where I put my entry? 142 million on the buy, 190 million on the sell, difference of 47 million in negative volume. And that's where my entry was, at the very top. At the very top. Now, where is my next entry? We're going to go look for that one because it was, where did I put that thing? I know. Oh, here it is. Forgive me. 2 entries. This was the first one right here. And this was the second one. So I got in here, and then when it came up, I got in here again. So original entry was here at 153.88, and my second entry was here at 153.97. Now between both, I'm up right now at this point with 2 standard lots. I'm up 299 pips in one trade. Now this was before the announcement. Now everything looked as if it was going to go long, but it wasn't. And see this indicator right here, see these dots right here? This is what I call the power dot algorithm formation. When these dots come out, they announce 3 things. Volume and momentum buildup. That means that there's going to be a tremendous amount of high frequency trading that they're going to be doing because they have to rebalance their risk to the upside before coming down. And number 2 is, or number 3 in this case, is the direction of the trade. We can actually see the volume divergence in this. So as complicated as this may look to the human eye, it's not. It's very simple. I can attest to that because not just because I helped design it, but also because I've trained other retail traders to use it. And so we took this trade hours in advance before the rate announcement, 3.5 hours to be exact. Now you're going to say, well, how did you know it was going to go short? Very simple. It was their order flow. It was the divergence in the trade that made this trade so easy to predict that I didn't lose sleep over this one. I simply just took it. So before your very eyes, I'm going to close this trade. And we're going to take a snapshot of it because I think it's important to take a snapshot of it. And we're going to say thank you very much. We just made 291 pips. So, good trade. That's 291 pips so far. Now let's go look at another trade. We're going to look at the EURUSD. Now I took this one the day before and I added another position today. And the reason I took this one short, and I like the euro, you know, I like the pound dollar, I like the euro, I like the US yen, I like the US CAD, I like the Aussie dollar. I like trading the pound Aussie, pound New Zealand, euro Aussie, euro New Zealand, pound yen, euro yen. Those are my favorite currencies. Now, the best times to trade them are usually during the Asian session and during the European session. So now in this trade, I've got 2 lots on this, and as you can see, I am up almost 90 pips. Now my original entry, as I said before, was the night before, and it was here, right here. Oops. What price did I short this at? 109.45. That's where I went short originally. Now, right now, of course, you're seeing this 109.16 because I added another position short, and it was here, right here, at 108.86 short. Why did I go short the night before? Because it was perfect. Power dot formations at the beginning of the new day, announcing that they were going to rebalance their risk to the upside and go down. They repeated it again at a lower level during the European, right before the European session opened, and then they did it again right before the US session. Oh my God, we call that a triple hit, and we bank on it. So they did it again here at the end of the day, beginning of the new day today. And so yes, it went down, it went up, it went down. You had power dots here that's announced long. They did, and now they're down. And so now, before your very eyes, again, I'm going to book this trade. And I'm going to take a snapshot because I believe that you should always take a snapshot of the trades that you take, so you can go back to them. It's relevant. So then we're going to take these 95 pips, 97 pips out of the market. 95. So we took 95 pips out of this trade right now. So, and we took 289 out of the other one. Gee, I think we're very close to 400 pips. What do you think? Let's take a look at the next trade that I took. And this one I took last night. This is on the US CAD. And like I said, results are what will matter at the very end. I think that your search is over, and that there's a change in your life coming. And you'll understand why I call this Phoenix Trading Strategies. I call it Phoenix Trading Strategies because the Phoenix is a legendary animal which is born from the ashes. The ashes of failure is what I call it. And so I'm going to help you to be reborn once again from the ashes of failure in your trading. We're going to change everything. We are going to make sure that you no longer look at trading from a retail perspective, but from an institutional perspective. This is the US CAD. Where was my entry? My entry was, where was my entry? Right here. It's right here, 131.64. First it went long, then it went short, then it went long again, then it went short. But it never went against me more than 15 pips. And now, of course, I'm positive. And I'm positive. I got in at 131.64. It's at 131.76. So I'm up. Oh, how much am I up? 10 pips right now. I can live with that. How about you? So let me take a snapshot before anything. Like I said, it's important for you to document your trades. It will make the difference. So 10 pips is what we're taking out of this trade. I can live with that. So we just made 400 pips in 3 trades. How do you feel? I'm excited. I don't know about you. Now we're going to go look at another trade that we took, the US yen. The reason I took these trades, because during the European session, you know, they can be somewhat active. Some will move more than others. Like I said, the only reason why I took the pound dollar short today was because there was going to be a rate announcement. It was obvious that they were not going to raise interest rates because they're following what the Fed is doing here, which is nothing. And 2, their order flow gives them away. I'm going to show you how their order flow gives them away when you come to my webinar room. Now, here's the US yen. Now, I went long here, right here. There's the arrow, and here's my entry, 121.59. And it went as high as 121.99. So I could have taken 40 pips out of this trade if I would have been awake, but I fell asleep. And I don't mind because I love my sleep. Sleep is sacred to me. So I'm going to show you that you don't have to trade the European session if you love your sleep. You can actually trade the Asian session and find great trades there. Now, if you live in Europe, then yeah, you want to trade the European session. If you live in the Middle East, if you live in Asia, it makes sense. But if you live here in the US and you live here on the West Coast where I live in California, then you'll only want to trade it once or twice a week because you love your sleep, and I love my sleep too. So this trade, we entered at 121.59. It's at 121.70, which is not bad. 11 pips. I can live with it. I would have lived with better taking 40 pips out of it, but I can live with 10, 11 pips. Let's take a snapshot of it. Again, always take snapshots of your trades. Very important. It will make the difference for you. So 10 pips. Not bad. Now, I did take one trade that didn't work out for me, and that was the Aussie dollar. Now, out of 5 trades to only have one that didn't work out, I don't know, you tell me. Am I doing things right or am I doing things wrong? Because you're going to see right now that this trade is the only one that really did not play out, and that my loss on this is only 22 pips. I went short here. Well, you can see right here, 71.36. It's at 71.57. So I'll take a snapshot because I want to review this and discover why it didn't go. And I'll take a 22 pip loss, which is nothing. After I've made over 400 pips, I don't know, you tell me. Are you ready to become a phoenix? Are you ready to take your trade to the next level? Because that's exactly what I'm going to do to you. I'm going to push you. I'm going to take you to levels of understanding, knowledge, and wisdom that you never thought you would ever be entitled to. I never thought I would be in this position myself. And like I said, I started 12 years just like you. I've walked your path. So I don't just walk the walk, talk the talk. I walk the walk. And I'm going to show you how to walk the walk. So we've seen good trades and bad trades. Now, I want to go over why this one didn't work out, because it's important. I took it short here. Now, why did I take it short here? Well, I took it short because there was an imbalance. You see these dashes? Instead of me showing you a bunch of numbers which don't make any sense, I'm showing you exactly where the buyers want to buy and the sellers want to sell in each candle. And I'm showing you, the reason why I'm showing you this is because that's all that matters. Nothing else matters except their volume and where they want to buy and sell at. See here, for instance, this is a bullish candle. okay? But the sellers were in disagreement with the buyers, and they announced that they were going to slow the trade down to the upside and actually bring it down, which they did. The buyers were up here, the sellers were down here. So if this is a bullish candle, if this dash would have been up here with the buyers or up here, then this would not be a discrepancy or an imbalance. However, this is an imbalance. Now let me show you something. Let me show you the volume. Ooh. This candle had 67 million on the buy, 37 million on the sell, difference of 30 million, and it did go up, no question about it. But the seller said, hey, hold up, I don't want to continue to sell to you at a higher price. So get ready, because I'm going to turn this trade around. And you're going to get a 2-candle warning. And that's exactly what they do. It's phenomenal. It's so incredible that it actually blows your mind, but it actually makes sense. So what happened here? They gave him a 2-candle warning. 1, 2. And then short. Now, it did go short. I entered it here, and at one point I was positive. But there was one thing that caused me to actually lose. And what was that? That the buyers, after the sellers came in to take control, the buyers came in and said, hey, wait a minute, I'm not in agreement with you. And now I'm going to give you a 2-candle warning before I take it long. And so the dash here is showing the point of control. You see right here where it says buyer POC, seller POC, this here is the point of control in the candle for the buyers. And this one is for the sellers. See, I'm not giving you an average. See, there are educators out there and developers that only give you one point of control, which is the average. Well, they have the wrong formula. Sucks to be them. Great to be me, because I have the right formula. And that's why I made over 400 pips today. You can do it too. I can teach you to do it. I can guide you. I can change the way you trade forever. And I can make trading make sense to you. So at the end of the day, we learn from our mistakes, yes. We study them. We dissect them so that we don't repeat them. This was a mistake, and it was, I have to admit, I took it short, expecting it to continue. I thought that the POC, the point of control, would actually come down and change, and it didn't. Instead, it held, and so that's why they flipped it. So they did give me a 2-candle warning. Now, where is the divergence? It's in the volume indicator. Oh my God, Ricardo, what have you done? You bad boy. See this one right here? And this one? This one announced, as it came down short, they announced. The buyer said, I'm not in agreement with you. I'm going to slow this trade down, and I'm going to take it back up. So here's your divergence right here. And it continued. I mean, this thing went on and on. But I'm going to show you to identify it before anyone else does. Oh my God. Can it get any better than that? So see, as complicated as this looks, it's not. I'm going to give you direction. I'm going to give you structure. I'm going to give you knowledge. I'm going to give you wisdom. And I'm going to take fear and doubt from your decision process. It will not cloud your mind anymore. It will not define your trade any further. Because you're going to be making trade decisions based on real information, ladies and gentlemen. Real information. So, hopefully with what little I've shown you, I've caught your attention. Hopefully. And like I said, we made over 400 pips today. So we must be doing something right. So, if you are interested in learning more about Phoenix trading strategies, the Phoenix trading method, and the information that evades you, because I'm going to explain to you why this trade is going short right now. You see here what is happening. You have a bullish candle and you have the point of control of the sellers at the very bottom, as even the buyers. This is not a common thing. Here at the very top, so this gave you what? A 2-candle warning. In this case, it was really a 1-candle warning. So what happened here? They did it again. Oh my God. The sellers were in disagreement with the buyers. The buyers took it long, but the sellers said, hey, no, we're going to take control. We're going to flip it and turn it around. What did they do? Boom, came down. The buyers conceded to buy at a lower price. And that's why their point of control changed and came down. They did it again here, but they're announcing, hey, wait a minute. I'm still not in agreement to go short with you. So I'm going to change this very quickly, and you're going to get a 2-candle warning again. We're going to see this one go down. Why? Because they're giving us a 2-candle warning. And so you see this dash right here. This is the point of control of the buyers. Now, until this candle closes and this changes down here, this is announcing that they're considering taking this up again and that they're going to use the trend stop right here, which are these little plus lines, which will keep you in the trend. These are the trend dots. So very important to understand how to use them, but I don't have enough time to show you how to use them today. The volume indicator, one of the most valuable assets. This algorithm and the price identifier, which are these dashes in the candle, which actually show the point of control for the buyers and sellers in the candle, you're actually seeing where they like to buy and sell. I mean, you have to understand, this is information that you never had before. Such is the case that, would a moving average make the difference? Let me show you. The answer is no. I'm going to put a moving average here just for kicks, just to show you. Now, usually, a lot of people like using the 50, and so we're going to do a width of 2. We're going to change the color because we don't like orange, so we're going to use aqua for this one. We're going to add another one, which is a 200. The 50 and the 200 are the most favored for most retail traders. And we're going to use white on this one, snow. And we're going to change that to 2. And we're going to add them. And then you're going to tell me if by adding these 2 moving averages, would you have made a decision? And I'm going to show you that you could not. So if anyone out there is teaching you and telling you that moving averages can guide you into making a trading decision, they're wrong. Why is that? See here, it said go long, but here it said go short. I believe my indicator more than this one. Do you know why? Let me show you the way. Here's the volume. What is wrong with this picture? This one is telling you that there's 97 million to the buy, 89 to the sell. There's a difference of 8.8 million. And I'll explain that later, why there's such a difference. But what is wrong with this picture? It's very simple. They broke and went above the 200 moving average. This says go long, but they're going short, Ricardo. What's wrong with that? You can't see the volume divergence with the moving average. Because see, the moving average doesn't really reflect the real volume in the candle. It reflects price action. How many pips the candle's actually moved. Oops. Did I say that? It's common knowledge. This next candle, 108 million on the buy, 114 million on the sell. Who's in control? It's a bullish candle with bearish volume. Would that make a difference for you? The answer is yes. Is it reflecting here in the moving average? The answer is no. It's that simple. I'm going to teach you and show you how they've counter-programmed all these other indicators which you have been commonly using. Ichimoku cloud, Fibonacci, Elliott wave, moving averages, stochastic, MACD, RSI. You're not going to be happy. You're going to be very upset because you've invested time and money to learn about them, to come to one conclusion, that they cannot work for you. under these market conditions and this new order of trading, which is digitally manipulated by the banks and market makers. You see, they're not on your side. They never were. You just have to come to terms with that. But I am. I am on your side because I understand exactly what they're doing. And you will too. And that's why this trade that went long here, you'll look at it, but you'll see that it's short-lived and you'll understand why. And you'll understand why and where the sellers are announcing that they're going to slow the trade down before they turn it and go short. I think that will make the difference for you in the very end. Now, if you can show me another suite of indicators that shows you how to take a trade 3.5 hours before a rate announcement and actually have positive results the way I've demonstrated to you, I'll be the first one to buy it. Because I'm a student of life and trading forever. I love to learn. Such is the case that because I've had such an open mind about learning about trading, I've been able to learn about the mistakes that I've made in the past and that everyone else has been making. And that's why when it comes to order flow footprint, I have the right formula. Everyone else is wrong. They may not like it. I don't care. They're not supposed to. I'm not their friend, and they're not mine. But I am yours if you want my help. So that's all that I have to share with you today. I hope that you've enjoyed my presentation. I hope that I have made a difference for you. And at the end, I hope that you can understand the roadmap of Phoenix Trading Strategies. This is my contact information. You have my emails. Email number 1, info@phoenixtradingstrategies.com. Ricardo@phoenixtradingstrategies.com. My phone number, 818-431-1357. I'm here. I never hide from anyone. You can call me anytime except during the middle of the night. If you don't own my software, do not call me in the middle of the night. My sleep is sacred. But I am awake during the day from 9 a.m. Eastern all the way up to about, 1 a.m. Eastern. I'll be here for you. I promise. Thank you for joining us today. I hope this video has made a difference for you. I hope that the chapter that I wrote for Trading Pub for this ebook is relevant to you, and I hope that when you're thinking of which road to take to learn to trade, you consider Phoenix Trading Strategies. Go check out my website. It's here at the top, www.phoenixtradingstrategies.com. I want to thank Trading Pub for allowing me to share my knowledge and wisdom with you. And if you think that I'm not the person to help you, then I wish you the very best in this journey. Good luck, and thanks again.